right, Kalpen, hi, and welcome to this very special episode. We are wrapping up 2025 and stepping into the new year. The entire year, when I tried to get in touch with Kalpen, either he was traveling or he was just dead busy. So how was this entire year? Let's just do a recap. AMC specific year.
I think it is a real year.
Real year. Why do you say that?
Because markets are behaving the way they should.
Okay.
Asset classes are moving the way they should, with their usual tone of uncertainty.
Okay.
Because prior years we have generally been very certain about markets. Almost everyone is very certain that सब कुछ ठीक ही है, सब कुछ अच्छा ही होगा.
Right.
And that's not how generally markets should be. They have to fluctuate. That's their natural order. So this is a year where we've seen meaningful fluctuations. In fact, between January and February, we had a downward drift to the market. Between September last year to February, we saw 20 to 30% correction. From February to now, we have seen almost the same 30% getting recouped back. So in a way, we've had a flat year. So वैसे देखा जाए तो कुछ भी नहीं हुआ है और बीच में reasonably volatile movements have happened, and we've seen emergence of gold and silver as two asset classes which for almost a decade had done nothing globally. And this year also has seen stocks in rest of the world which were in the parking lot for the last 10-15 years, which had gone nowhere, suddenly went up 50 to 100%. So I think and Indian stocks are, which have generally done very well over the last 10, 20, 25, 30 years, are going through their normal phase of consolidation. So they are in resting mode right now and hopefully getting ready for the next 5-10 years.
What's the trend shift? You mentioned gold and silver. Are they taking the center stage in the portfolio? Because sona to hamesha hi suhana hota hai.
बट उसके बारे में कोई कभी बात नहीं करता था. एक साल पहले किसी को सोने में इंटरेस्ट नहीं था, सोना सो रहा था. So see, I think this is human nature. We start getting excited after the first 50 or 100% return comes through. And of course, there's a lot of demand, like almost 50,000 crores worth of gold and silver fund sales would have happened in the last year from almost nothing in the prior year. In this year versus the prior year. So, last year equity funds would have received around 4 lakh crores of net sales. This year also the number is roughly around the same 4 lakh crores. But there's a shift. Almost 1 lakh crore less flows this year have come in thematic funds or NFOs. So normally जब market गर्म होता है तो बहुत सारे thematic funds और NFOs में flow जाता है. ये साल markets have been flat, so more or less money has gone more towards flexi cap funds. They have captured, which is a good thing because that is the core bread and butter product which investors should have. Small and mid caps continue to get better flows than prior years, but that's because a lot of SIPs have happened in the small and mid cap in prior years, so automatically that flow remains. And then gold and silver added another 50-60,000 crores. So I think the shift in trend is people are adding more of multi-asset funds because they have done well. And they've done well because almost 50% of multi-asset funds are not invested in Indian stocks. They are either in gold, silver or global stocks. And all these three components have delivered returns worth 3 years or 5 years or 10 years in 1 year. Now, so the investor pattern is to invest what has done very well in recent times. And I think that will continue going ahead also. But we have to be mindful that just chasing an asset class because last 1 year return is 70-80% is not a wise way to invest. It's better to invest in line with what your mandated asset allocation should be.
But do you think that's happening? Because see, the resilience for mid cap and small cap has gone up. And even for example, if we take the November AMFI data, we did see a dip in the inflows for mid cap and small cap, but then the numbers are again shockingly very good in terms of inflows. It has made a comeback, and now we can see them being a part of your core portfolio, which it has to be any which ways. Even the exposure has gone up in a particular portfolio for mid cap and small cap. So you think they are regaining momentum again, along with large caps? You can have mid cap and small cap also as a strength and for stability in your portfolio. Do you think the narrative changing towards that now?
I don't know. know yet. It's not that because any narrative is changing, people are changing their asset allocation. See, remember, when there are 5 crore people who are investing in markets, or who are invested already in mutual funds, there will be 20-30 lakhs getting out in a year, because they have fulfilled their goals, or they got scared with volatility, or they think I need to book profits. There will be 20-30-40 lakh new investors coming in. So there are different groups. We tend to homogenize everything and find undue patterns, even if none exist. It is just the fact that money is coming in equity as an asset class. Now some people choose flexi cap, some choose multi cap, some choose large and mid cap, some choose multi asset which also has large and mid cap, some choose value. अब बहुत सारे labels है. But ultimately equity में पैसा आ रहा है, ये important है. 4 लाख करोड़ आ रहा है. It's not that people are discerning कि मुझे large cap में ज़्यादा करना है या mid cap में ज़्यादा करना है. ऐसा नहीं है. It's not so. I feel that, and particularly see small and mid cap, a good thing that the fund industry has done over the last 5-7 years is we have always encouraged SIPs, particularly in small and mid cap, because these two categories in the long term have done 2% more than the large cap category over a very long period of time. But intermittently they can earn 10-15% lower than large cap also. So they are volatile. And if they are volatile, SIP is best suited. In fact, we did a campaign some time back when there was this fear in the market that SIP बंद होनी चाहिए, कि लोगों ने बोला था SIPs बंद करनी चाहिए. We did a campaign, I won't stop, to say that SIP बंद.
Like a pledge, I remember.
Yeah, like a pledge that especially जब market गिरता है, when NAVs fall, that's the best time to add units. So this is a year of unit collection. मेरा मानना है कि this is a year where the NAV bull market has slowed down, but the unit bull market has probably just started to take place, because when NAVs go nowhere, you keep adding more units. So I think people are just maintaining their SIPs. They are increasing their SIPs in some cases. Newer investors are coming in. But it is not that people are deliberately saying, I want to add more small caps or I want to add more large caps.
That is not happening.
Because the numbers are not too different. So last year, if the number was X, I don't exactly remember.
Despite India being a Viksit Bharat story,
अभी आपने स्टोरी बोला तो स्टोरी में थोड़ी पैसा लगाना
No, I'm saying, see, if you're banking on that story for India.
But you should never invest on stories. We've always said that never invest on stories. India has enough data for it not to be a story. We encourage investors to be rational and objective and fact-based. So more than the story, India is about, we published that in our Netra document time and again, that India is a country with, very good return on capital. The second highest ROEs in the world come from India. The second highest growth rates in the world come from India for corporate profits. And promoters also reward shareholders in India. In many other countries, companies don't make, they make accounting profits. They don't make cash profits, which the shareholder gets advantage of. So we have good governance, we have a democratic setup, we have a capitalistic setup, ROEs are in place. So the conditions are generally fertile for reasonably better rates of return than inflation. So let's say when I started my career, if inflation was 10%, I earned over the next 10-15 years 15% return. So inflation ke upar I made 5%, or investors made 5% over inflation. Today we are in a world of 4-5% inflation. So that 15% return expectation is unfair. We might make 10-12% in any category of equity, large, mid, small. But still it is 5% more than inflation. That is the real point. We may think 10% ho gaya to kam ho gaya, but that's not the way to think about it. And so India is not about a story of labels alone. Of course, these are intents, these are aspirations that we want to aim towards. We all want to be a developed country, and work continues to happen. But we never will move at a linear pace. It's a very large democratic country. It will have pulls and plugs, and that will create volatility. That will create fluctuation.
Which we saw, definitely.
And remember, 25% of Indian market still is owned by global investors. They will have their own stories. They will have their own narratives. They will have their Viksit America or Viksit Russia or Viksit China. It could happen. So this is a common marketplace. We should not get trapped with labels. We should focus on हमारी खुद की story क्या है. As investors, what is the story I am playing for? I am playing for building my long-term wealth. Then I need to have equity as a dominant part. I also am a scared investor at times. Most investors are scared with volatility. Then let me have some bit of alternative asset classes like bonds or gold or silver, which can cut the volatility of equity. Because there will be enough years. There are enough years in the last 30-year history of our markets where 1 year, 3 year, 5 year returns have been zero, or less than zero. In such periods, the wise investor does not get affected, but most investors do get affected because it's hard-earned money. So hence, our investing has to be aligned to our personal stories, our personal finance, and not the stories you and I will talk about.
Go.
So let's also talk about 2026 and the year coming up ahead, okay? You publish a report almost every month, and a lot of factors and sector-specific talks which are mentioned in the report as well. Are we looking at sector-specific movement continuing in 2026 as well? Because this year we had a lot of global headwinds, you know, you will talk about the trade tariff things, geopolitical tensions. We also saw demat accounts going up. We also saw SIPs maintaining the record high level, okay? It's the same momentum that you see we are entering 2026 with now?
See, anecdotally, what I hear from our channel partners, our distributors, our consumer conversations are that there's a bit of fatigue that, you know, equity should have given 15%, 20% return like last few years, but this year returns are less than fixed income. In some pockets, returns are just 1 or 2%. So there is fatigue in conversations yet, but that is not showing in flows so far. Month on month, numbers still look robust. And I personally tell every investor that you should not care about these numbers. I tell this to even TV channels.
Yes,
that
definitely.
Why do you track this? मुझे 10 साल के लिए इन्वेस्ट करना है, मेरे को मेरा रिटायरमेंट बिल्ड करना है, तो मैं बाजू वाला हर महीना पैसा लगा रहा है नहीं लगा रहा है, why should I care? बाजार सस्ता मिल रहा है डाल दो, दिमाग मत लगाओ ज़्यादा. But you know, just because data is available, we have to talk. So flows are still, you know, reasonably robust. In terms of, you know, sectoral trends, last year we've seen, or the year of 2025, we've seen banks did reasonably better, whereas last 5 years they were underperforming. BFSI as a sector was not doing well. This year it has done well. Now, capital market space is really booming, but capital market stocks didn't do as well, in spite of record additions of folios and demat accounts. Because at some point valuations also start taking over. Early half of the year, auto stocks got hammered because of world growth concerns and tariff concerns. Second half of the year, they moved very sharply. You know, we are publishing our annual note where our head of equity, Vineet, has written a very interesting comment that you know, we sell more, the value of mobile phones sold in India now has overtaken the total value of car sales. So, but this year, last 3-4 months, auto stocks have done very well. So I think that shift is happening. Tech stocks have gone sideways to negative in this year because of, you know, them not having any AI label right now, whereas the world is obsessed around AI. But I think these trends shift very fast. Sometimes it's very difficult to preempt that agle saal kya hoga. Generally, the approach we try to take is what are stable sectors, and if they are available cheap, you own more of that. At some point in the near term to medium term, they will deliver value. Like banking, last year we launched a banking fund, a BFSI fund, because its prior 5-year returns were very poor. So valuations had started coming to fair value. And we felt that, you know, ये core sector है 10-12% से grow करता है profit pool. Valuations have normalized. It's a good time to add. At some point, maybe this year, tech stocks will reach in that band. Maybe they are still 10% ahead of fair value, but they could, you know, get there. So I think this is the time to remain diversified and, you know, choose individual companies rather than any big sector. But in our portfolios overall, BFSI still remains the largest weight.
Okay. How much trust on consumption? Looking at the consumption theme, that was a reboot. You know, we saw money coming in people's hand after obviously the income tax change, and then GST Mahabachat Utsav that started in Navratri. We will see the impact on companies in Q3 and Q4, but then overall trajectory of this particular theme changing. How optimistic you are?
So what's happening again, you know, I'll urge you to read the annual note which will come out shortly, that in consumption also the patterns of consumption are changing so rapidly. 100 new brands which, let's say, I have not grown up knowing about have emerged, and they are reaching consumers digitally and not through the traditional distribution channels. So the profit pools of traditional consumer companies is not growing as fast. Is getting reallocated to a lot of these smaller companies, boutique companies, you know, direct to consumer brands, and they are not in the listed market. And some of them which are there in the listed market are maybe loss-making companies right now, because they are building a very different business model to reach these consumers or to acquire big consumers, a huge pool of consumers right now, and hopefully become profitable few years out. So it's a very tricky space that what are profit-making consumer companies are growing at single-digit profit growth rate and still at 50, 60 times on valuation. What are fast-growing consumer companies, जहाँ पे वॉल्यूम ग्रोथ है या रेवेन्यू ग्रोथ है बट प्रॉफिटेबिलिटी नहीं है, तो उसका वैल्यूएशन करना थोड़ा मुश्किल होता है बिकॉज फिलहाल प्रॉफिटेबिलिटी नहीं है. So, in that context, we are very discerning of, you know, choosing few from this new age market very selectively, where we believe that the business models are sound and they will do very well.
Okay.
And choosing again very selectively here where valuations are comforting.
Right.
But at large, the comfort on stable profit growth and reasonable valuation still remains more with BFSI as a sector in our portfolios.
Okay, okay. So basically, we should be banking on India-specific sectors and India-specific stories. Is that what is the bigger message? Any global-facing exposure that you think should be taken?
See, again, it should be a function of where are those companies in the cycle. So let's say there are periods when pharma companies which had global-facing US-specific exposure, they delivered 100 to 150% return in a matter of 18 months.
Right.
Because they had got hammered down over the last 5 years, and there were turning points in terms of consolidation in that space. So I think it's better to not invest around labels like this.
Okay.
A label of India. There are enough companies in India itself which are down 35-40%, which are all India facing, because their valuations have gone crazy. So I think investors, and we also sometimes look at only the narrative of these labels. जैसे 2-3 साल पहले लेबल था China +1, चाइना का पूरा प्रोडक्शन यहाँ आ जाएगा और कितने सारे स्टोरीज पे स्टॉक चले, and then these stocks are down 60-70% for last 3-4 years. So I only urge investors that one thing they should learn when the year changes is to change this behavior of, you know, seeking the labels or seeking the narratives. That is harmful. I think we have to go one step deeper or 2 steps deeper to the core कि पैसा कहाँ बन रहा है, profits, और वो क्या भाव पे you are buying them, at what valuations are you buying them. This combination is a safer combination over and above the label combination. Label can give you the broad trend, but uske baad, is it fully priced in, not priced in? So I would say that this is a time to just remain in diversified portfolios.
Okay.
Either diversify across sectors and market caps, as if it is a pure equity portfolio, or apart from this, diversify across asset classes, where it could also mean global portfolios. It could mean global stocks also. It could mean gold and silver also, even though they've run up. But you know, through multi-asset fund, you are buying gold and silver in a more disciplined manner.
Right.
And a little bit of bonds. Interest rates have again risen. Look at the narratives. You know, world over, policy rates are being cut. Central banks are cutting rates, including India. But bond yields have actually risen.
Right.
So normally one would have said interest rate cut होने वाला है, तो interest rates नीचे जाएंगे.
Okay.
But actually yields have risen across the world. So the markets are nervous. Bond markets are also nervous that how will this tariff uncertainty in the next year spill over? Will it create more inflation?
Right.
So we'll have to wait and watch. So it is a world where uncertainty is increasing in the real economy, but markets are too confident. And that confidence is right now getting challenged.
Right. But, you know, looking at the investor base and looking at the investor mindset shift, do you think they are less risk averse and more risk seeking?
I think so far, I would agree that the confidence is there that पिछले 5 साल में अगर पैसा बना है almost हर साल, the same should continue. Why should it change? So I think the confidence has not yet broken.
Okay.
Investors are comfortable. I think investors broadly, the flows indicate they are comfortable to, you know, keep investing. I think also in the first few years of last, you know, post-COVID era, every year we have had a 15-20% correction. You know, either Ukraine war happened or Iraq war happened or India-Pakistan border clash happened or tariff wars happened. हर साल कोई ना कोई war हुआ है. तो market 15-20% गिरे है. And every year they have bounced back. So when they've fallen, see, remember this has been an SIP cycle for India.
Right.
90% investors have come through SIP. So they have benefited from all these falls because you are buying more units and immediately markets are rising back. So you increase your units in the first half of the year and second half of the year the NAVs went up. So net your portfolio values continue to go up. So this playbook has worked in favor of our investors all through last 4 years, including this year. First half markets fell, second half they recovered. So the biggest hero of this market is the SIP investor, or the biggest hero is the discipline of SIP. It is not you and I or, you know, one fund which did very well or one theme which did very well. Someone who committed himself, stayed loyal. And I think that pattern will continue. At the same time, 1 or 2 more years of slow markets, I think investors will start losing.
They start thinking about it.
They will. Normally, investors have a 3-year, you know, comfort zone.
Okay.
If for 3 years returns are not in line with expectations, they start getting nervous.
Right.
Logically, that number should be 5 to 7 years, because over a 7-year period, all is well.
You know, your AMC specific, what's the new trend in terms of investor choices have you witnessing?
I think we are seeing increased flows in our multi-asset fund.
Okay.
We are seeing increased interest and demand and conversations on our GIFT City LRS fund, where we have launched a global equity fund, giving exposure to a lot of interesting businesses in different parts of the world.
Why is there awareness so low about this particular way to invest?
I think, see, for 30 years we've been talking about investing here only. This has just been a matter of 30 months that global investing has become mainstream.
Right.
And see, rightly so, India has delivered. In 30 years, India has been the best performing equity market, even after currency depreciation. And especially in rupee terms, our Indian investors who have been here for long have taken advantage of the movement or of the 13-14% compounding. So even if awareness was low, it didn't matter. It didn't hurt them. Awareness goes up when suddenly that asset class shows significantly higher returns and our asset class slows down. So I think the last 18 months have been the first such turning point where our asset classes are slowing down and global stocks have run up sharply. So that's where the awareness will start going up.
Catching up. Okay. So I want 3 headlines from you for 2026. What should be the conversation points? That's my last question to you. So maybe you can take some time to think about it. Conversation trajectory that we should be having in the beginning of 2026. So far, looking at the cues, because I'm assuming the same will trickle down to 2026 beginning as well.
See, the year is changing.
Right.
The Earth has completed one, revolution around the sun.
Right.
Doesn't change anything from a market point of view. So there's no need to deliberately change anything in conversations.
Okay.
Because 1st Jan ho jayega, things don't have to change. Continuity to hoti hai.
Okay.
So I think we have to continue this dimension of markets will fluctuate. That is the first universal law. It will go up, it will go down.
Right.
They are uncertain and many times unknowable. We will try to make sense and sound intelligent to posture to you that we know it all, but at least I don't know it all.
Okay.
And because markets are uncertain and I don't know it all, I submit to the concept of diversification and to the concept of asset allocation.
Okay.
These are the 3 things that I would like investors to keep always in mind. These are the fundamental truths.
Okay.
The temporary truths will keep changing. Today banking, tomorrow IT. But as investors, we can't execute these trades. We can't keep jumping. We'll pay tax, we'll pay transaction costs, and so on and so forth. So bring stillness in investing, build your framework right, understand risk right. Don't keep asking कितना बनेगा 20% कब बनेगा. Also keep asking क्या market, क्या पैसा कम हो सकता है और कहाँ कम हो सकता है. What type of decisions can make me lose my money permanently? How can I avoid that? If I can't do these things on my own, let me take help from an advisor. So maybe, as a precursor, the conversation starter, we've again done a very large investor education campaign recently, which is saying no more.
Okay.
No more being unaverage investors. No more chasing hot stocks. No more chasing hot themes. No more investing in NFO just because a mutual fund has launched it. No more stopping your SIPs when NAVs are falling. No more chasing stocks by going on a direct website and saying, show me the last 1 year, 3 year, 5 year returns. These are generally bad behaviors. So whether the year changes or not, these behaviors need to change.
Right.
And I think that is a message that investors should take back.
All right, that all comes with good knowledge, and knowledge is always power. So stay diversified, that's the word. Thank you so much for being on this show, and thank you so much for watching. You can stay tuned to ET now. Thank you so much. Bye-bye.